Hello viewers, I Muhammad Abdul Habib welcome you all to our application AIMS tutorial. In this video, we'll be discussing chapter 1 Bills of Exchange. Here is the question, page number 41, question number 1. On 1st July 2014, Madhu sold goods to Pawan for rupees 5000 on credit and drew a bill of exchange for 3 months for the same amount. So who is the seller of the goods? Madhu is the seller of the goods. Who is the buyer of the goods? Pawan is the buyer of the goods. And the goods are sold worth rupees 5000 on credit, and the credit time period allowed by seller Madhu to buyer Pawan is for 3 months. Pawan accepted the bill. It means that the buyer Pawan has accepted the bill drawn by the seller Madhu and returned it to Madhu. Pawan met his acceptance on maturity. It means that as per the promised time, the buyer Pawan has made the payment to the seller Madhu. Pass necessary journal entries in books of Madhu and Pawan. So we are required to pass journal entries in books of seller Madhu and buyer Pawan. So here is our solution. The format for journal entries is date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees, and the heading will be taken as journal entries in books of Madhu. In brackets we'll be writing it as drawer. So the seller of the goods will be called as drawer, as he is drawing a bill on buyer. So drawing means he is preparing a bill on buyer. So also we are required to pass journal entries in books of buyer. So here is the format for journal entries in books of buyer. The format for journal entries is the same: date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees, and here the heading will be taken as journal entries in books of Pawan. In brackets we'll be writing it as drawing. So here Madhu, he is the seller of the goods, he will be also called as drawer, and Pawan, he is buyer of the goods, he is also called as drawee. So the goods, here the date will be taken as the date of sale. So the goods are sold on 2014 July 1st. So here the date will be taken as 2014 July 1st. So here also the date will be taken as 2014 July 1st. So as Madhu has sold the goods, sales, it is an income to Madhu. So it will be credited as to sales account. Whereas Pawan has purchased the goods, it is an expenditure to him. It will be recorded on debit side as purchases account debit. So Madhu has sold goods to Pawan. So Pawan is the receiver of the goods. So his name will be debited as Pawan account debit. Whereas Madhu has sold the goods. So he is the giver of the goods. His name will be credited in books of Pawan as to Madhu account. And here the narration will be recorded as being goods sold to Pawan on credit, whereas here as he has purchased the goods, here the narration will be recorded as being goods purchased on credit, and the amount will be recorded on debit side and credit side as 5000. So even in the books of buyer, the amount will be recorded as 5000. So the journal entry on 2014 July 1st in books of seller Madhu is Pawan account debit 5000 to sales account 5000, and the narration is being goods sold to Pawan on credit. Whereas the journal entry in books of buyer Pawan on the day 2014 July 1st is purchases account debit 5000 to Madhu account 5000, and the narration is being goods purchased on credit. So as he has sold the goods, it is an income, it will be credited as to sales. As he has purchased the goods, it is an expenditure, it will be debited as purchases account debit. He has sold the goods to Pawan, so he'll be writing the name of Pawan. He has purchased the goods from Madhu, so he'll be writing the name of Madhu. Then as soon as the goods are sold, the seller will draw a bill on buyer immediately. So the date again will be taken as 2014 July 1st. Even here the date will be taken as 2014 July 1st. So he has prepared a bill. Seller Madhu has prepared a bill on buyer Pawan. So it will be bills receivable from him for him. So as it is an asset, it will be recorded on debit side as bills receivable account debit. Whereas it will be bills payable for buyer. So it is a liability. So it will be recorded on credit side as to bills payable account. So he has to receive the bill amount from buyer Pawan. So Pawan name will be credited as to Pawan account. Whereas the buyer Pawan has to pay the bill amount to seller Madhu. So Madhu name will be debited as Madhu account debit. So here the narration will be recorded as being bill drawn for 3 months on Pawan. Whereas here the narration will be recorded as being bill accepted for 3 months, and the bill amount will be the same amount for the goods sold. So as the goods have been sold for 5000, the bill amount will also be 5000. So 5000 will be recorded on debit side, 5000 will be recorded on credit side. Even in books of buyer, 5000 will be recorded on debit side, 5000 will be recorded on credit side. Now the time period allowed by the seller to buyer is 3 months. So from July 1st we have to calculate 3 months. So July 1st, August 1st, September 1st, October 1st. So 3 months are ending on October 1st. Even after coming on October 1st, still we have to allow a grace time period of 3 days. So October 1, October 2 and October 3. So the due date falls on October 4. So here the date will be taken as 2014 October 4th. Even here the date will be taken as 2014 October 4th. So in question it was given as Pawan met his acceptance on the due date. It means that the buyer Pawan has made the payment as he has promised to pay after 3 months. So on 2014 October 4, the buyer Pawan has made the cash payment to seller Madhu. So Madhu is receiving cash. So cash is coming from for him. So cash will be debited as cash account debit. Whereas for Pawan cash is going. So cash will be credited as to cash account. So as he has received cash, he will be returning the bill which he has received from Pawan. So at the time of receiving the bill, it was recorded on debit side as bills receivable account. Now on the due date, as the cash has been received by the seller, he will be returning the bill to the buyer. So the bill which he, at the time of receiving the bill, he has recorded it as bills receivable on debit side. Now in order to cancel this, it will be recorded on credit side as to bills receivable account. And at the time of accepting the bill, he has recorded bills payable on credit side. Now as he has fulfilled his promise, he will be cancelling bills payable. Now it will be cancelled by writing it on debit side. So it will be recorded on debit side as bills payable account debit. And here the narration will be recorded as being bill amount received on date of maturity. And here the narration will be recorded as being bill amount paid on date of maturity. And the amount will be taken as 5,000 on debit side, 5,000 on credit side. Even in books of buyer, the amount will be taken as 5,000 on debit side, 5,000 on credit side. So these are the journal entries in books of seller Madhu and buyer Pawan. So the first journal entry which we have passed is on 2014 July 1st. Pawan account debit 5,000 to sales account 5,000, and the narration is being goods sold to Pawan on credit. Whereas the first journal entry is passed in books of buyer is 2014 July 1st. Purchases account debit 5,000 to Madhu account 5,000, and the narration is being goods purchased on credit. As soon as the goods are sold, the seller of the goods will immediately draw a bill on buyer. So again the date will be taken as 2014 July 1st, as it is bills receivable from him, because he has to receive the amount from the buyer. So it will be bills receivable for him. So the journal entry will be bills receivable account debit 5,000 to Pawan account 5,000, and the narration will be being billed on for 3 months on Pawan. Whereas the same journal entry on the same day, the transaction on 2014 July 1st will be recorded in books of Pawan as Madhu account debit 5,000 to bills payable account 5,000, because he has to pay the bill amount to Madhu. It is a liability to him. So bills payable will be recorded on credit side, and he has to pay the amount to Madhu. So Madhu name will be debited, and the narration will be recorded as being bill accepted for 3 months. Now the 3 months are completing from July 1st till October 1st. So after coming to the date October 1st, still we have to allow a grace time period of 3 days. So the due date falls on October 4th. So the date here will be taken as 2014 October 4. Even here the date will be taken as 2014 October 4. So on the due date, the buyer has made the payment to seller. So seller is receiving cash. So cash will be debited as cash account debit. And in return, the seller will be returning the bill which he has received from buyer, which was recorded here as bills receivable account on debit side. Now it will be cancelled by writing it on credit side as to bills receivable account. So the general entry on 2014 October 4 is cash account debit 5,000 to bills receivable account 5,000, and the narration is being bill amount received on date of maturity. Whereas on the same day 2014 October 4, he has made the payment. So cash is going from him. So cash will be credited, and he will be cancelling the bills payable which he has recorded on credit side. Now it will be cancelled by writing it on debit side as bills payable account debit 5,000 to cash account 5,000, and the narration will be recorded as being bill amount paid on date of maturity. With this, we conclude this session. Hope you have understood the topic. See you all in next video. Thank you.